Welcome to Project Titan, Wall Street Analysis, Season 2, Episode 4. I'm Saketh and I'll be your host today. We will discuss what has occurred in the US since the last podcast episode. If you enjoy this podcast, please like and subscribe to our channel and comment on what we can improve. So, let's dive in. Today, our first topic will be how Trump spoke about a CoinDesk article that actually helped XRP, a digital currency. Last Tuesday, President Trump shared a CoinDesk article about XRP on Truth Social, sparking enthusiasm within the XRP community. The January article detailed how Ripple CEO Brad Garlinghouse saw increased US deals and hiring after Trump's November election victory. Following Trump's post, which garnered over 6,300 likes and 268 replies, many users expressed optimism with comments like XRP to the moon. They discussed XRP's potential role in a US crypto reserve. Despite the buzz, XRP's price remained steady at $2.53, though its 24-hour trading volume rose by 26% to $5.5 billion. This development coincides with the Department of Government Efficiency targeting the SEC, or Securities and Exchange Commission, possibly leading to an XRP ETF approval. Warren Buffett's growing cash reserves are raising some concerns on Wall Street. Berkshire Hathaway's cash and treasury bills surpassed $300 billion in the third quarter, marking a record high. While it's common for Berkshire to hold cash, this buildup has startled observers. Investors are eagerly awaiting Buffett's annual letter to shareholders for insights into his market outlook. What would they do with all this cash? Asked Stephen Check, highlighting how extreme this situation feels. Berkshire, which generates cash from its diverse businesses, has been a net seller of stocks for the past 9 quarters. This trend has led to questions from financial advisors about why they should buy stocks if Buffett isn't. Many believe that stock prices in Buffett's preferred sectors have become too high for him to find attractive investment opportunities. This graph on the bottom left is a graph of what stock Berkshire Hathaway holds a lot of. It's currently Apple is in the lead and Chevron is the least. Now, I'll talk about how inflation caused a slowdown in interest rate cuts. US stocks declined following the first inflation report for 2025, which raised investor concerns about persistent price pressures and revived worries that interest rates may not decrease as anticipated. The Consumer Price Index rose 3% in January compared to a year earlier, accelerating from December's rate and faster than economists had predicted. The WSJ Dollar Index and Treasury yields increased after the Consumer Price Index figures were released, while stocks experienced a downturn. January CPI often reflects significant price adjustments made by businesses at the start of the year, making the report a crucial measure of the Federal Reserve's efforts to control inflation. The Fed managed steady rates at its meeting last month after implementing a 1 percentage point cut in 2024. This data suggests to the Fed that they're fine where they are, and if anything, there may be some risk that the rates aren't high enough, said Andy Schneider, senior U.S. economist at BNP Paribas. Next, we will talk about the job hiring in the U.S. Hiring in the U.S. showed solid but quite disappointing results in January, with 143,000 jobs added and the unemployment rate dropping to 4%. This fell short of the anticipated 169,000 jobs, though revisions upward for previous months added 100,000 jobs overall. Despite this, economists view the report positively, noting that the slower job growth is not alarming. Stephen Brown from Capital Economics remarked, "The softer gain of 143,000 payrolls in January isn't a cause of concern. Sectors like healthcare, retail, and government saw job growth, while mining, oil extraction experienced declines. Overall, the job market is cooling, but remains strong with a sense of optimism about future growth." Into how Texas is getting its stock exchange. The big board is expanding into the Lone Star State in response to the upstart Texas Stock Exchange. The New York Stock Exchange plans to launch a fully electronic exchange headquartered in Dallas named NYSE Texas. It will do so by reincorporating its Chicago exchange. As the state with the largest number of NYSE listings, representing over $3.7 trillion in market value for the community, Texas is a market leader in fostering a pro-business atmosphere, said Lynn Martin, president of NYSE Group, in a statement. Both NYSE and uptown rival Nasdaq appear to have taken notice of the Texas Stock Exchange, which filed paperwork in hopes of gaining regulatory approval to start listing companies next year. Our final topic is how Walmart may experience some weird sales growth. Walmart may see sales growth despite rising costs for everyday items like eggs, coffee, and gas. Recently, the company set the fiscal year 2026 revenue and profit targets below analysts' expectations, leading to a stock drop of 6.5% and declines for Target and Costco as well. Economists express concerns about rising trade tensions increasing costs. However, Walmart, the largest U.S. grocer known for quote-unquote everyday low prices, has attracted a diverse customer base, leading to increased sales, particularly in store brand food and e-commerce, which grew by 20%. The latest quarterly results reported $180.6 billion in revenue and $7.9 billion in operating income, meeting Wall Street's expectations. Walmart stock has approached all-time highs, and stockers are remaining cautious yet steady in their spending. Thank you for listening to Project Titan Wall Street Analysis. We'll see you later.